It's April 1st, 2026. Current time is 6:02 in the p.m. Eastern Standard Time. The markets, I'm not sure if I can keep up with like the Strait of Hormuz and all the bombings and stuff in Iran well enough to know, based off that, what the markets may or may not do. But I do know that the markets are usually based off some technical data. Sunday, what I mapped off for crude, it went to the 127.1% level. This is it right here. This is Fibonacci scale. This is 100% level. This is 127.1% level. You can see how it went up to that. And then rejected perfectly. Then aimed for the statistical mean, which is right here. So once you get into a decent short entry, whether it's the 100% level or the 127.1% level, whatever you think is going to be a major rejection point, usually it will gravitate back towards some statistical mean eventually, or if more news comes out, and it may keep on going up or down or whatever. The VIX, it almost came up to what I had modeled out. 29.30, 29.75 is what I had modeled out for potential rejection. It did come down to a statistical mean. The prior higher level is what became support. So I was actually very, very, very bullish on Monday for the VIX, so the rest of the markets would be able to come down. But that's also, negating the fact that news events comes out. The Strait of Hormuz, Iran is a big deal right now. It's come down to the bottom of the average daily range. Technically, it's where anytime it gets below that on a statistical basis, it's technically quote unquote below where it's supposed to be. And then last week's statistical mean is used that as resistance right now. So that's not the best look at the VIX. So the rest of markets can go up technically. The dollar, it's dropped substantially. It was at 127.1% level from what I mapped off a couple of weeks ago or days ago. I can't remember. Anyway, that's all circumstantial. Did I not do the Nikkei? I don't think I even did it. I did not do the Nikkei. I did the NASDAQ. And right here is what I modeled out for Monday. It came down to the lower level. You can see how it got picked up. It went for the statistical mean. It already did one time and rejected. Then once it broke above, then pretty much on a 5-minute chart, once it did break above, like at 12:30 yesterday, I guess, you was nothing but bullish. And you was nothing but bullish. It went up to the higher level and tried to reject some from there. It wasn't extremely clean to be a breakout. It did get up to there. It gave you 1 5-minute, whereas red, which on its technical basis, you're supposed to take a short here. But then you close your short position out very rapidly. You cut your position very quickly to not lose too much. What would have been nice for my setup, what I see a lot, is if this creates resistance initially, pulls back a little bit, and then this creates support, you're going to get a massive push potentially. But for Sunday's level, it came up to the 127.1% level precisely. Rejected some. Rejection may not be the best term. Profit taking is more better of a term. The reason I thought the NASDAQ would have done the same thing is cause what the S&P 500 did this morning at or near market open. It spiked up to the 127.1% level above the top of the average daily range and then pulled back. That would have been an excellent short entry. If you could have caught it. It didn't last too awful long. Even on the 5-minute chart, it didn't last extremely long. Again, like the NASDAQ is what kind of controlled this after the fact. And I'm not even sure on the Dow. The Dow was at a lower end, I think, right? it was damn close to what I had modeled out for the lower side of the spectrum. It used prior. Let's see here. I'm gonna be lying. Never mind. You can see how like the prior higher level, and then this week's what could have been resistance also kind of made some resistance. You get different indications if it will hold or not. One of the things that you get confirmation that it's continue to be a short or potential reversal for long is an average true range trailing stop. On the 5-minute time frame, it did not break down below, so you're not. That leaves you one less confirmation that it is a short right here. You get a lot of chop through here right in the morning, midnight, and then that push up to 127.1% level. And I'm not sure which is which. The Russell, it hit some 127.1% level as well. It was this week's. This week's 127.1% level was at the top of the average daily range. It made perfect resistance as well. Or profit taking. Profit taking is what it did. Out of all the times I've seen this, how many times I've seen this, to stay in a long position whenever you're up here, when the NASDAQ was up there, when the Russell was up there, you have two confirmations that, it may reject, and it's harder to maintain algorithms to keep buying up into there. If it pulls back to here, at 2481, there's more algorithms that will pick it up because it's, showed it's very bullish and that's a dead buy potential. I don't care to go over anything else. I've been out of town. It's hard to, keep up with this, especially when, you're really busy. Anyway, like, oh yeah. Let me show you one more that's worth going over because this kind of irks me a little bit. I had an alert that went off on Ford the other day from this past earnings. The level I had was 11.11. My alert went off, I think, at 11.13 or 14, something like that. But anyway, 11.11 was a level I had modeled out from months ago. Prior earnings, not the past earnings, the one before that. And it hit 111 precisely, and it made some support there. Again, like, I never would aim for anything above the statistical mean unless I'm going to watch it like a hawk. If I'm watching like a hawk and it has nothing but buy volume like every single freaking day, like today for instance and yesterday, I'm sure it probably has nothing but buy volume. Today's 91% buy volume. Yesterday it was probably 89% buy volume. But whenever you get confirmation on a daily time frame, like you still ain't got it yet, but my alert did go off back here, and that is as precise as you can possibly get. And predicting that, way in advance, like 4 or 5 months in advance from when that happened. I didn't follow this, and I should have. 161.8% level did make very good resistance or profit taking from 14.56. And they're about, and you get confirmation and you stay short like usually. Many times this top of the average daily range is what you can short from here, and you never got to the top of average daily range again except for here and here, and you can continue shorting because it's nothing but freaking sell volume. The volume node with the most on it is right here, and that's about half and half. And that's probably 127.1% level. No, it's 161 or whatever it is, 161.8% level. So at 11.13 is also, or 11.14 is anybody that's on that volume node that keeps up with that will be potentially picking it up there as well. That's all I've cared to go over today. I'm gonna have to wait till like tomorrow or Friday to do my monthly for what's expected for the month of April. So whenever you do on demand, let me show you real quick. When you do on demand, which is like where you go back in time on any market, I can go back to Monday. And I need to be able to do Tuesday. So tomorrow I'll be able to go back and do Tuesday's levels and map them off and see why certain market did certain things. But anyway, that's all I got today.